Everybody, hope you're doing well. Hope you're doing great this morning. Good evening, if it's evening where you are. And if you're watching this on replay, you can still engage and comment. We love your feedback. Love to hear from you. And when you come in, let us know where you're watching from, so we can acknowledge you. Thanks for watching. Today, I'm going to be talking about building blocks to your finances. What are the building blocks of your financial house? How do you approach the subject of finances in an organized way so it's not just all randomness? You got to approach things in an organized way. The more organized you are on the subject of finances, the easier the flow will be. So very important that that your money is organized. I'm going to talk about what are the building blocks of your finances today. My name is Martin Matthews. My wife is usually here with me. She and I authored of this book, Let's Fight About Money. Wrote a book about couples and money. How to communicate about money, handle conflicts, and build an unbreakable financial house. These are important things people need to know. So we own several businesses. We have a primarily in the financial services industry. We have financial consulting and investment agency, and we have an insurance agency. We have clients in 48 states. So that's a little bit about us. But today we're going to talk about how can you understand the building blocks to your finances. What are they? How do they work? How do they work with each other? How do you make sure you can coordinate these areas so that you can keep building and keep leveling up? So we're going to talk about that today. Give me 1 second here. I just want to check something. If you can hear me okay, just give me a thumbs up or let me know in the comments. All right. All right. So first area, there's 6 areas to your financial house. 6 building blocks to your financial house. What we want to do is make sure that you approach them in a very organized way so that you can get the most out of that. First area of your first building block of your finances is your cash flow. And it's very important to not skip steps when it comes to your finances. I'm going to do a whole series on crawl, walk, run when it comes to your finances. What are the stage in which you're doing things that you're crawling, walking, running, and then eventually you might be able to fly with your finances, right? So cash flow, that's the money flowing in and out of your household or business. Well, cash flow is what fuels everything else. It's the fuel of your finances. We get people reach out to us a lot and they're like, hey, I want to build wealth. I want to invest. Very first question. Excellent. What is the cash flow? What's your cash flow like? What is your financial position? What do you have? What do you have flowing in to you and out of your household? All of that, very important, because that is the fuel for your finances. If there's not sufficient cash flow, if the cash flow is too low, you can't do a lot of the other things you're trying to do. So it's why we talk a lot about cash flow. Number one question we ask in our business and in our household is, how do we increase the cash flow? What do we need to do to continue to increase the revenue? That's our game. It has to increase. Our game is continual increase. It should be going up and to the right. Okay. And so examining your cash flow, looking and confronting your cash flow. One of the things we do in our business and in our household is, this is also something else I'm going to write out. I'm going to build out a financial manager. If you are managing the finances of the business or managing finances in your household, how do you do that? I'm going to build out a description of that. How do you actually utilize and understand how to manage the finances of your business or household? You don't have to be an accountant. You don't have to be a bookkeeper or anything. But if it's your business and it's your household, you got to understand how to manage the finances of it. So that's something I'll put a lot of things together coming with that. But a cash flow is money flowing in and out of your household or business. Income. This is a piece of information that the more you apply this piece of information, the more you're going to win on the subject. And that is, your income must be greater than your expenses plus reserves. Your income must be greater than expenses plus reserves. So tracking your cash flow in our household and business. Chelsea is my primary job is to create the revenue. Chelsea's primary job is to direct the revenue, tell her where to go, right? And so every week I get a report about our cash flow. How much was made? What was our target? How much needed to be made? What happened? What happened in the business? And every week I look at that and I see, okay, what do we need to do and what do we need to adjust? So every week we review that, review the expenses in the household and all those kinds of different things. So very important you understand what's flowing in and out of your household. All right. If you want a simple free tool to be able to do this with, you can use mint.com, mint.com. It allows you to track the flow of money into your household. You can use it for business, but it's very simple to use on a household. It's a free app. You can utilize that. So cash flow, first building block to your finances. Second area is debt management. So debt can be a very emotional subject for people, subject of debt. And look, debt itself there's good debt and there's bad debt. So you can utilize debt for assets, meaning if I want to buy a real estate property and I don't have all the money in cash, I will finance it. That is debt. But if I'm buying an apartment building, let's say it's $1 million apartment building, and I put $250,000 down, I need to get $750,000 from a lender. That is debt on that property. The idea is the tenants that's in there will pay enough that collectively it will service the debt, pay for all the expenses, all that, and create a surplus. Otherwise, it wouldn't be worth it to do. So when you see all these apartment buildings, that all represents debt. All those apartment buildings got debt on them, just about. So so understanding debt management is the second building block. So the reason some of these are tied together is whenever somebody gets into bad debt, like debt on credit cards, high interest rate debt, because their cash flow was short, that's why a lot of times debt management feels very emotional to people, because they're managing this debt and they can't seem to get out of the cycle. Part of the reason for that is because their cash flow was not as high as it needed to be, so they needed to make up the difference with debt. So you can choose to manage no debt. You're like, hey, I don't want to manage any debt. But debt management is a building block to your finances. Understanding what the difference between good debt and bad debt is, and understanding how to use it effectively, if that's your play, or knowing when to not use it. Very important to understand. So that's the next building block. The third building block is reserves. So we'll talk about cash flow, debt management, reserves. We don't call it an emergency fund. The reason we don't call it an emergency fund is what happens when you tend to name something. It manifests, it materializes. So if you call something an emergency fund, guess what you will have? Emergencies. And so emergency is also a condition. Your finances can be in a condition of emergency where you have to you gotta get things done, otherwise it's gonna go down. So so very important for you to understand that when it comes to reserves, don't call it emergency fund. Just call it reserves. Businesses have reserves. Have you ever seen a business line item? It will say reserves, cash reserves. The business never says we have an emergency fund. Businesses don't put down emergency fund. They say reserves. Do the same thing for your household. And so once you have reserves, those reserves can be used for different things. And they can be pulled on during different times. So common example, people ask how much should I have in reserves? Depending on where you are, over half of Americans could not afford a $400 emergency, which means they didn't have $400 saved. So if you have more than $400 in reserves, you're ahead of half of the people in America. And then you want to have $1,000 in reserves. Now we're talking about very basic here. You get $1,000 in reserves because that is most unexpected expenses that come up, $1,000 will be able to handle it. But if you're talking about a business or an affluent household, you start talking about multiple months of reserves. and a year of reserves. I feel better having a year of operating expenses for my household and my business. That's just what I like, and that's a target that we set out to do, and then we just continue to build reserves. And the idea is reserves can be tricky because sometimes when your reserves start to grow, you can start thinking, oh, I can relax. Don't relax. Keep building your cash flow, even if you have substantial reserves. Because what happens is you relax and you didn't end up with a deficit. You may have a month or two where your cash flow is not as high, and then you have to tap into your reserves. I hate tapping into reserves unless I'm using it for some other aspect of increasing our financial position. I don't like to use it if there's a cash flow deficit month in our business or something like that. So you always want to keep producing revenue greater, far greater than your expenses. Treetop Flyer, thanks for subscribing to our YouTube channel. 1804, thanks for following us on Instagram. And if you like our content, share with other people, invite other people. Every day we go live Monday through Friday at 9:30 a.m. Eastern time, talk about personal financial development. Today we're talking about the building blocks of your finances. There are 6 of them, so I'm running through really quick on these ones. So we've talked about cash flow, debt management. We've talked about reserves, setting reserves targets, not calling it an emergency fund, calling it reserves. Number 4, proper protection. I want to spend a few minutes on proper protection because this is vital to your finances. So many people are very interested in building wealth. I want to invest. I want to build wealth. The first thing, that's advancing your position. I want to advance my position. The first thing you need to do before you advance your position is you have to secure your existing position. That'll be like, when empires were trying to go conquer land, it would be foolish for them to leave their own homeland exposed, going to try to conquer more land, because that means anybody can come in and attack and set you back. So when we talk about proper protection, we're talking about having the right kinds of instruments, having the right legal structures, different things like that in place to make sure you are protected and your assets are protected. So first thing is, before you invest, you want to look at, what's my cash flow? What's my debt situation look like? I don't believe in that you should pay off all your debt before you invest, because I like good debt. I like debt on assets. That's my perspective. I don't want to be debt free. I don't want to have bad debt, meaning I don't want to have negative credit card debt. I want debt on assets. That's why I don't want to be debt free. By the way, all the billionaires all have debt, hundreds of millions of dollars of debt. Elon Musk, hundreds of millions, $500 million in debt. Elon Musk is. You guys can look this up. He will go get loans against Tesla stock. He does it all the time. In 1 year, he borrowed $500 million. And this is a guy with no income, no income from. He doesn't take a salary from Tesla. He doesn't take bonuses, all of that. Recently, he had to do some stock options thing that matured, and he had to sell some of them. But otherwise, Elon doesn't have income. So how is it this dude doesn't have income yet can get $500 million worth of debt? Because he has assets. He can borrow against his assets. That's debt. So you understand, these people are playing a different game. None of these billionaires are debt free. None of them. All these billionaires have some level of debt, either through their businesses. When they issue bonds, like a company may issue bond. What is bond? Bonds are debt instruments. They're borrowing money. They may just get financing from other places. In fact, sometimes when they have really strong cash flow, like they have strong cash flow, strong financially, they will get a line of credit. There was a recent insurance company, 170-year-old insurance company, had a phenomenal year, phenomenal history. You know what they went and did? They got a $750 million credit line. Why? Because they want access to capital that was cheap for expansion. So all these people have debt. Okay, it's that the middle class have bad debt. They have consumer debt they went and shopping on credit cards. That's the type of debt they have, which is very which is bad debt because it charges you the highest interest rates and it doesn't cash flow, so it's not on an asset. You use it by liabilities. But when you have good debt, you have that advancing for you. So proper protection, your greatest asset is yourself. You're your greatest asset. And so in order to do that, your ability to produce revenue is an asset in itself. I want you to acknowledge that about yourself. Your ability to go to work and produce a result and get paid. Somebody pays you for producing a result. That is part of your abilities and your skill set. That is very valuable, right? Your ability to continue to produce at higher and higher levels and get paid more. That's a valuable skill. So before you advance, go try to build wealth, you want to make sure that your cash flow, your income is protected. So that's one of the things life insurance does. So, the funny thing is, it's very interesting that in America, they mandate that you get car insurance. Driven many years, no car accident. You're not guaranteed to get into a car accident, but you're guaranteed to die. Yet, it's not mandated. And so because it's not mandated, people don't go out and go and obtain it. Even though it's like super, you can get super cheap life insurance. It's cheaper than your car insurance. But people don't do it, even though it's the single biggest benefit in the tax code, which means you can leave your family hundreds of millions of dollars of life insurance, and that money will not be taxed to them when they receive it. It's the single largest break in the tax code. And life insurance existed before the IRS was created. So before you advance to go build wealth, you secure your position by making sure that, hey, if on my wealth building journey, what if I got sick or hurt or passed away? How is my family going to continue to push on if they're depending on the assets, depending on the revenue I'm producing right now? You got to be able to answer that question. So if your business depends on you and you're a top producer in your business, how will the business continue if something happened to you? If you got sick or hurt? The life insurance steps in and replaces your revenue. It replaces your production through that revenue. So that's one of the very, very key important things. Now, that's just one aspect of life insurance. That's if you pass away. There's other types of life insurance you can use while you're still living. You can actually store money inside of life insurance policies and leverage it to buy real estate. So the reason why people do this is because they can generally earn a higher interest rate on a life insurance policy than it would at the bank. Banks are not paying very high interest rates. So if I can store my money elsewhere, not have to worry about losing it, store my money inside something where there's no market risk, and I can earn interest and dividends on that money, and I can borrow against it to go buy other assets, then that might make sense to me. So we store a lot of money inside of life insurance policies for that purpose. And this is not new, by the way. It's not a new concept. And the reason why you don't hear so much about it is because in the 1980s, rich people buy a bunch of these. Rich people are way more insured than you think, even though they have a lot of money to buy a ton of insurance. And so a lot of them store a lot of money inside of these policies. Even your president, Joe Biden, he has 6 of these. He's been borrowing against his life insurance since 1983, almost 40 years. He's been borrowing against life insurance policies. He just has loans, takes loans whenever he wants, all that. He disclosed that when he ran for president. So there you go. So this is not a new concept. This has been around for a long time. Wealthy people have used it for a long time. They store money in there and leverage it for other assets because they can keep their money or play inside a life insurance policy and leverage it for other stuff. So if you have life insurance, don't have life insurance, curious about it, and you want a quote from us, we have an insurance agency. That's one of our businesses. You can go to 6buildingblocks.com/quote. It's the number 6. So 6buildingblocks.com/quote. There's a video in there where I explain the 2 main types of life insurance, and you can actually request a quote from there. So before you advance to go build wealth, you have to make sure your current position is secured, because a lot of people will reach out like, hey, I've got $100 and I want to start investing. Okay, so let's say you invest your $100 and then next month you pass away. What do you leave your family? $100. wouldn't it make more sense for you to take the $100 or $50 or whatever it is and buy some life insurance in case you pass away and you leave your family hundreds of thousands of dollars versus the $100? Logically, that would make sense, but it's not a way a lot of people think about it. So that means securing your position, proper protection, securing your position first before you go and start to expand. All right, so that's proper protection. So we talk about cash flow, debt management, reserves, proper protection. And then fifth building block is build wealth. Today we're talking about the building blocks of your finances, how to organize and look at your finances through these kind of 6 areas that make up your financial house. So build wealth. Everybody wants to build wealth. Build wealth. So there's many different ways to build wealth, but you can't build wealth without cash flow. You cannot build wealth without cash flow. So one thing to understand when it comes to building wealth, there's many different ways. You can invest in the stock market, you can own a business, you can buy real estate, you can do a combination of all of those things. The most important thing when it comes to building wealth is what avenue do you want to start with? And just because you hear a bunch of people talking about something doesn't mean that's the thing for you to go do. Like a lot of people say, you need to buy stocks. What if you don't want to buy stocks? What if you don't even understand which companies to buy stocks in? Just because somebody else is talking about it doesn't mean that's the thing you should do. What if you want to buy real estate? So what happened is in America, a lot of people were told you have to save for retirement. When I came to America, that's what I was told to. You got to save for retirement. Okay. I didn't even know what the hell I was doing. So I put my money in a 401k. What if I wanted to buy real estate instead and I could have stored my money elsewhere and then accumulated it and then used that to buy real estate? So now sometimes you can still use your 401k if you want to buy real estate. There's some restrictions on how to do that, but you can. So I'll see a lot of people that've been saving money in retirement accounts and they go like, you know what? I'd rather be over here in real estate. Why? Because they want to see something physical. They know people always need a place to live. They can have tenants, all of that, right? So they're like, I want to get into the real estate game. So one thing is looking at what path you want to go or you want to start with when it comes to building wealth. And it starts with education. The biggest economic crisis that we're facing right now is the lack of financial literacy. It's not inflation, even though inflation is the most pressing thing. Because if people were more financially educated, they would have foreseen that inflation big time was coming, because your government was printing a lot of money and it slowed down production. So when your government inflates the money supply, prices end up rising to match the new amount of money that's been introduced into the system. So we were talking about inflation, as soon as we started seeing all that continual printing of money, we started telling people a lot about that. And so now what you're doing is you're feeling the effects of it, right? So then they have to raise interest rates, and sometimes they raise interest rates too fast, too high. It can trigger a recession because people start contracting their spending. Walmart came out and said, hey, we think people are going to slow down their spending. Even when Walmart is telling you people are going to slow down their spending, because people that's where to go for discount stuff. That means that's not a great sign, which means you got to keep putting your attention on cash flow. So when it comes to building wealth, you want to understand looking at which avenues you want to learn about, become interested in, that you're curious about. Don't just do something because you see other people doing it or because you think it's popular or whatever. Understand about that asset class. Take your time to learn about it, become educated about it. Okay, you don't have to spend forever doing research, because some people they research forever and never do anything, so they never get anywhere. But understand enough, and if you're not sure, link up with people who are knowledgeable. A lot of our clients come to us for education. They're like, hey, I know how to make a lot of money. I'm unsure about these other steps. Can you help educate me about these things so I'm more knowledgeable about it? So then we educate them. Our educated clients are your best clients because they make better decisions. They understand the decisions they're making. So when it comes to building wealth, that's what you got to look at. How do you make sure that you're properly educated about the things you want to invest in, and you don't just follow the crowd, and you do the types of investing that you like and understand. So that's sometimes it means investing in yourself, investing in your own education. We had a client who owned barbershops. Everybody would tell him, he would meet people and say, you need to be investing in stocks for your retirement. Get a retirement account. The guy goes, dude, I'm not interested in a retirement account. All I know is cutting hair. So we're like, why don't you just buy more barbershops? No one ever even just told him that. Why don't you just buy more barbershops? And he's like, oh, that's a great idea. I can buy more barbershops and get cash flow. Yes. You don't have to have a retirement. Nothing that says, hey, there's no law that says you have to have a traditional retirement account because you live in America. No. Maybe your retirement account is a portfolio of real estate properties. In his case, is multiple barbershops. For other people, it's franchises. Whatever it is, you don't have to do what everybody else is doing. You can choose what you want to do. The other thing about building wealth is, the reality is, there's something called an accredited investor. So an accredited investor is generally based on your net worth. You have a certain amount of net worth, or you're generally a high income earner. And you have to show 2 years above a certain amount of income, and then you can go to become an accredited investor. There are some deals, financial deals, that you cannot get into if you are not an accredited investor. So as a result, people always ask us, what's the best investment? Well, sometimes the best investments is not accessible to everybody just because of where they are financially. Now think about it. If somebody's raising $50 million to go buy a portfolio of apartment buildings, they're not generally going to go to the everyday guy on the street and try to raise 50 million. They're going to go to a group of accredited investors and see if 50 people want to put in $1 million each, and they raise it from 50 people in a week, in 2 weeks, in a month. They're not trying to get everybody to ask 1 million questions to put $5,000 in, because it would take forever and you got to manage so many people in that deal. So a lot of times you will miss out on, you won't get access to certain deals just because financially may not yet be qualified for that. And so you wouldn't even hear about them because there are other avenues in which to reach people. So I'm going to do a show about the financial needs and the financial issues of what I call the working affluent. People are affluent, but are still working, building their businesses, things like that. And we'll discuss things like that, how to become an accredited investor, how to get access to private deals, what are some of the things you need to be thinking about, all those kinds of things. And the last building block is build legacy. Build legacy has to do with various types of financial things you need to have in place so that the things you build can pass on to the next generation without too much interference from the government. So things like having a will, a trust, a power of attorney, healthcare directive, who's going to make medical decisions for you if you can't make those decisions for yourself, who's going to handle your financial assets if all of a sudden you got into a car accident, you were in a coma, if you have properties, who's going to handle all of that? If you don't have those things in place, reach out to us, send us a DM. We'll help you so you can understand how to put these things into place so that you have them working. One note about trust. There's not just one trust. There's many, many different types of trust. Many different types of trust. They range from everything from irrevocable life insurance trust, special needs trust, testamentary trust, dynasty trust, charitable remainder trust. There's all kinds of different types of trust. So whenever people are like, hey, I want to get a trust. Okay. Why? What kind of trust? What are you looking to solve? So trust exists to solve a problem. Part of it is like a general trust would be like, I don't want to go to probate. Probate is like if you just have a will and you pass away, you got to go to court to family court and you probate the will, which it exposes your assets. You have all kinds of people in your business and it's a very public thing, and a will can be contestable. So people may have a trust. So let me define what a trust is. A trust is I'm just going to kind of give you a layman's definition of it. So trust is a legal structure or agreement where assets are held for the benefit of someone else. So keyword there is assets are held. So if you don't have any assets, you don't need to be thinking about a trust. you may need to get some assets first, or start thinking with that in mind. Okay. So when you have a trust, the trust can receive, or the assets held in trust can follow your instructions, and the trustee can carry out your wishes. So a trust is appropriate, especially if you have minor children. So you have minor children and you have life insurance policies, like a large life insurance policy. You may want to look at making a trust the beneficiary, because your children are minors. Your 8-year-old is not going to receive $1 million check from the insurance company. The 8-year-old can't even open a bank account. So having a trust allows that money to go into the trust, and then you have somebody you name called a trustee, and they follow your wishes. For example, our son's 17 now, and we set up a trust, and the trust states that in the event that his mom and I both pass away, here's how we would want funds dispersed to him, right? So we have a lot of life insurance and our business and all these different things. So when he turns 18, he is allowed to receive a portion from the trust, a very small portion. When he turns 21, he receives another portion, and then so on. And we space it out. And the trust can help to take care of his needs. So let's say he says, hey, I graduated high school. I want to take a year off and I want to go volunteer in a village in Africa. I want to go help the kids. I want to go build wells and hand pumps and all that. I want to do that for a year. The trust will pay for his living expenses for him to go do that because he's volunteering. We also, I'm not going to hand somebody who's a drug user and drug abuser money. So before he receives money from a trust, he's going to have to submit to a drug test. Because why am I going to give? What if he turns 25 and he suddenly it's like smoking crack all day? That may not be appropriate for me to say, but what if that's the case? Do you think you want to hand somebody who's abusing drugs a bunch of money? What do you think they're going to do with it? They're going to go down even further. So that's for their protection. And I didn't work hard, put these things into place just to give it to somebody who's going to piss it away. So we teach him about finances. We teach him about all these different things so that he can be better prepared. So those are the 6 areas: cash flow, debt management, reserves, proper protection, build wealth, build legacy. Like I said, if you'd like a free life insurance quote, you can go to 6buildingblocks.com/quote. There's also some life insurance policies that pay you if you got critically sick or hurt. So it's not just about dying. There's tons of different ways you can use your life insurance while you're still living. Just that people aren't aware of it, so they think of dying when they think of life insurance. It's not death insurance, it's life insurance. So you should be able to look at how can I use it while I'm alive to advance my financial position. So you can go to 6buildingblocks.com/quote. There's a video on there you can watch about the different types of life insurance. You can request a quote on there, and we'll be happy to put one together for you so you can understand how to continue to advance. If you are a business owner, you want to make sure to have life insurance in place. Your business can pay for the life insurance. There's something called key person life insurance. If you're a key person in your business, that the business can pay for it as a business expense. So you can have that as a benefit from your business. So thanks for watching. We will be back tomorrow. We're here every day, Monday through Friday, 9:30 a.m. Eastern Time. You can catch us live. You can catch us on replay. If you have any questions in the area of your finances, if you want to understand how these different things work, feel free to reach out to us. Send us a DM if you're watching on Instagram. Send us a DM. There's links in bios to all kinds of resources that we have. So once again,